So good morning, active traders, and welcome to our live broadcast here. Our trading week ahead. Been doing these over 15 years, Saturdays, coming at you live here from Colorado on Saturday, October the 8th, 2022. If it's Saturday, it must be in Colorado. Anyway, nice roll off in the market as anticipated. As I told you last Saturday, I said we'd likely get a dead cat bounce, round, bad kitty, whoosh, and then a rollover. And that's exactly what we got. And we had a really good sell-off day on yesterday. We were still not under support, which is right under that 35.80 or so. So we'll see if our S&P takes out support next week. In the meantime, we're going to look at favorite strategies. Let me start off by asking you, what is something that you were trading last week? Give me a ticker. Give me a ticker of something you guys were trading. Hey, thanks, Brock. Appreciate it, man. Hey, Gray. Hey, Wendy. What were you guys trading? Of course, I always trade UVXY, but we had quite a few others out there. Pot stocks were good. Kind of a bust, though. It was like a sell the news. I bought a lot on Thursday night, but thankfully I sold it all back right on the 7 a.m. Pre-market because they gapped up and they started pulling, so I went to cash. And then they sold off all day. Pot stocks may be a good play for next week on a bounce. Things like Canopy and Tilray and Sundial and whatnot. We've got other sectors to look at. Yeah, oil strong. Thanks, Paul. Yeah, Halliburton and Marathon Oil. HAL and MRO. We also like, of course, Occidental Petroleum, OXY. But yeah, the oil sector may well be strong. And why? Because the Saudis said they're going to cut production. Or OPEC, whatever. With the production cut looming, price of crude will likely go up. So we do want to pay attention to those oil stocks. That would be the two lead sectors. Oil is probably the first and possible in cannabis. What else do we have? Hey. Thanks. Yeah, we got so many charts. Now let's take a look. So the first thing to do is develop a trading plan. If then, if this, then that. So for me, if the market continues to sell off, then I will continue to scale into my inverses like SQQQ, SOXS, UVXY, and TZA. If the market bounces, I'll play SOXL and T triple Qs, right? Anyways, we got a bounce here. This is a classic dead cat bounce. It goes down, does a little bounce. We have a key test of support. The trading strategy note would be don't trade aggressively Monday unless we get under that support level or we get a big rally. But if anything less than a strong gap on Monday leads to a not very tradable day, probably going to be a choppy. The reason I say that is a test of support days are usually really terrible for traders because of whipsaws, right? And moreover, it's usually a tight whipsaw band, right? Very tight. So we're at support, but markets are likely to chop around there until it resolves either to the upside or the downside. So kind of like an argument. We want to stay clear of that until things are calmed down. So we want to see which way the market runs. So the trading note would be light trading, light size on Monday, maybe Tuesday, and I'm not going to heavily trade the market until at least Wednesday. By Wednesday, that's very valuable intel, by the way. You should know that. You want to become a trader first. Understand how markets run. Like last week, I correctly called them. I said Monday and Tuesday would definitely be long. Wednesday probably choppy and end of week sell-off, and that's exactly what the market did. I'm not psychic. I don't forecast. I don't guess and gamble. I know what patterns is. It's all about patterns. And so the pattern here is we're going to get chop on Monday and Tuesday. So you don't want to trade aggressively as an active trader Monday and Tuesday. You do want to go in once it resolves to the upside or the downside, start Wednesday. That's valuable. That alone is worth being here for that one tip. That's important. Stay clear when things are testing support or resistance because it usually chops around, right? We've all been stopped out with things chopping around near support. So don't do that. Now, what else is in play? If you look at our volatility index, you can see the VIX. Our other VIX. VIX has been on the climb here ever since that breakout right near the 22-24, way back when we were all the way up. We got a bearish engulfing, right? Bearish engulfing and a couple of indecisive doji, right? So that's uncertain. Remember last week I told you that, and I mentioned that we'd likely have a choppy, somewhat choppy next week because of that. A bearish engulfing leads to the drop, right? Bearish engulfing, drop. Doji undecided, red candle, drop. But the VIX is starting to recover, which is bearish for the market, of course, inversely related to the S&P, starting to bounce. So I want to say if the VIX, my hurdle for the VIX, R1 is going to be 33. I'm not going to use the obvious 35. You're too late. But if our VIX spikes over 33, I'll be strongly bearish. If we get back down to the 28, 29 level like we were on Thursday, Wednesday, and Thursday, I'll start to get a little bit bullish on anything that's running up. Oil stocks may be good. If cannabis bounces finally, it may be good. Other sectors of note would be things like healthcare and consumer goods and some of the utilities and some of the defensives. We don't want to do growth until we start to see maturity in the defensive plays, and that means your sectors like things like healthcare and consumer goods and all that kind of stuff. So want to stay relatively cautious Monday, Tuesday, more aggressively on tail end of the week, and the VIX will also help navigate that. R1 would be 33. If we break that, we start to go short, and R2 is the obvious break over the 35. That's the only strong signal on this chart is wait till it gets over 35. But I always like to put on some small bets ahead of that, right? For example, I bought 1,000 UVXYs last night, or yesterday after the bell, I should say, as I often do. And sometimes it pays off, sometimes not. You want to start small, under a lot, under 1,000 shares, and then scale only, maybe get a 2, 4, 5, 6, once 1,000 shares, once it starts to run aggressively. But where we're still inside congestion, the message is be cautious. If you do trade, what I do is I often trade like 400 and 500 shares at a time. I did over 115, I think it was 117 round trips yesterday. Very busy. You want to trade small shares during quiet market times and large shares during volatile, strong market times. So change up your how many shares you trade. That's important. Let me throw out a quick question because I'm curious. Honestly, I'm curious. I want to know. Really big turnout today. How many shares, for those of your fellow stock and ETF traders, how many shares do you trade in your first trade usually? And let me know if you're a day trader or swing trader, because that's really important. Like day trading, you're probably not going to do too well trading 100 shares, but swing trading, that's how I start. Usually a small size. But so tell me, are you day trader or swing trader? Just type in D or S, and then how many shares? Like D 500 or S 200. Are you day or swing trader? How many shares do you trade usually at a time? We got a couple. We got 50 on the day, 100 on the swing. Swing 12K. Hey, well, that's size. Stay with that UVXY. You got swing 300. We got both. We got swing 100, day 500 or 1,000 UVXY. Thanks, swing 50, 100 swing. S start with 50 to 100. Yeah, Mira's right. Yeah, Mira's always right. Yeah, that's what I do too. Swing start small. What else? Okay, that's it so far. Well, thanks. Keep them coming. Always curious to see what kind of size you guys trade, because every trader is different, right? We all have different trading approaches. I've learned to listen to people like my colleague Tom Sosnoff, who's brilliant, and Tom always says, trade small, trade often. And that's correct, because you're going to get bit a lot of times. So like the law of large numbers, you want to throw a lot of darts. The ones that don't work out, let them fall by the wayside. The ones that do start to work, then it gets exciting. The biggest money you make as a trader is not ever, or very seldom, unless you get really lucky, but from a systematic professional trading standpoint, the most money you make comes from your scaled in positions. Remember that. And that's something, that's a writer downer. That's a poster on the wall. Most money you make, or at least the most money I make, is from scaled in positions. And that's true for both day and swing trading. For example, my biggest day trading wins are where I start off, say 500 shares or whatever, and then I buy another 500, a dime or 15 cents up, then another 500 and another 500. And then once it starts to tail off and I see red candles, then I sell it all, bank a nice profit. So I scale in for day trades, maybe 10 or every 10, 20 cents with blocks that say 3 to 500 shares, and scale in during a run up. And then at the first sign of a rollover, I go to cash. For swing trading, I like to start off small, like 50, 100 shares. Maybe 3 or 4 days later, if it's still going up, then I will start to add more shares. If it just chops down and goes sideways, I may just go to cash because it's not performing. That's another quick tip. How many of you have run out of money when you're trading? We all do, right? It's depending on how many shares you're trading, you don't have any more capital available because it's tied up in current positions or pending positions. One thing you need to do as an active trader, and this is a good professional tip, is make sure that you do house cleaning on non-performing assets, right? Meaning if you're in something on a swing trade and it's just farting around for a week or two, go to cash, or at least what I do is often I'm right, but much later than I thought I would be. So what I'll do is let's say I'm in, say 200 shares and it's just been dinking around for the last week or so. And I'm like, what am I wasting my money for in this? I may go down to 150, go down to like 50 shares as a placeholder, but go to cash with the rest of it. And so you can cycle back and forth with your money. Then if it does finally break out, you'll see it. You won't miss out on it because your placeholder trade, maybe it's 20, 40, 50 shares, something under 50 shares, really tiny trade, is still alive, and it starts to light up green all of a sudden. Hey, so that's a good personal scanning approach, and I just use trades. I'm a trader, so I will maintain a swing trade for up to 2 or 3 weeks. But if it doesn't start to run, I will go to cash in most of it, but I keep a little bookmark, a little, 20, 30 shares, maybe under $300 or $400 worth of that instrument, instead of thousands, as a bookmark. And maybe, Thursday afternoon, it finally starts to run green. Okay, now I start to scale in. So it's another quick tip on professional trades. Now let's see what else we got here. We've had really good upside volatility in things like UVXY. I was trading this aggressively. What's the candle pattern? And again, for candles, learn from Steve Nissen exclusively. Don't learn candles from anyone else. You'll just get burned. The right guy to learn candles from is the guy who originally got all that stuff over here and figured it all out for Western traders. So candlecharts.com for Steve. Anyway, what is that pattern that we see lately? Yeah, Mirror Guy. I knew Mirror would get it. Who else? Heidi got it. All right. The ladies got it. Come on, fellas. You got to catch up. Mirror and Heidi both have it right. What's the pattern we see in the last week of trading from a candlestick standpoint? And probably more importantly, what does it tell you should do? What does that signal tell you? As a professional trader, as somebody who wants to make a lot of freaking money, you got to know you got to recognize. First comes knowledge and pattern recognition. You got to know what you're looking for. Stages of competency. You want to be the conscious competence. We actually want to get an unconscious competence where it's on autopilot. The point is pattern recognition, and then how do you start making money? Where's the action? Show me the action. Okay, I did over 1,000 shares in a single trade. I think it was a single trade, maybe 700 shares, whatever. I was buying some after the market. We have a bullish engulfing, right? So this is a BE right here. So with that bullish engulfment, what you're looking for is upside moves. And when you're looking for trades that work, one thing I think that can really benefit you is to not only understand what the pattern looks like, so that's your bullish engulfing. So that tells you to do what? The patterns speak. It's like the market tells you. You got to listen. Then you got to take action. If the market tells you stuff and you just ignore it, you may miss out. Or at your peril, if it's a warning sign and you ignore it, that's not good. And also if it's an go in, buy me side, that's not good if you miss that too, right? So anyway, that tells us to go long. And if you're looking for new trades, one of the things I want you to start doing is not only understand the patterns, but how to trade them intelligently. What else do we have? Now on the upside, both our SQQQ and our SOXS have been outstanding candidates, and those are my favorite, especially SQs and UVXY. Those are my two favorite instruments. I also trade LabD. Had a really good day yesterday, up 8% from the open. If we look at the intraday, you can see. Right, easy money. Now, one thing that you want to do as a trader is test what I call buy the open, sell the close. Because otherwise, you may make a little bit here and there, but it's very difficult to navigate intraday charts that are kind of up. They're uptrending, but they're choppy with their pullbacks. That's really hard to trade, right? Because you may get in on the breakout, get stopped out. You buy the pivot, it goes up a little. You take the money, that's fine. Then by the next breakout, you get stopped out. By the pivot, you make it off again, on again. It's easier. I found if you say buy the open, put a hard stop right under support, and then come back to it later in the day, either lunchtime at the earliest. You got to wait till at least 11 o'clock at the earliest, and tighten up your stop to at least right over break even. That's what I'll do. Is I'll start off. Let's say you buy 22.20 or so, or let's say you buy 22.40. Okay, on the first breakout like 22.40, you have to put the stop not way down under pre-market support, but say previous day's high, so the 21.6. So you buy 22.4 with initial stop at 21.6. You just let it go all day. You come back at 3:30 and am I paid or did I get stopped out? And that's a good way to manage intraday plays without having to navigate the intricacies of the ups and downs. Is buy the open, tighten up a trailing stop near lunchtime, and then just walk away until 3:45 or so. Again, like UVXY was, now this is an example of what kind of trend? How many of you would agree that this is a strong trend? Is this a strong trend or a weak trend? What do you guys think? What constitutes a strong trend? Is it something that spikes right up, like those pop and drop junk $3 stocks, the low float junk that amateur kids trade pre-market? No. It's a very strong trade. Good. Everyone says strong 45, strong 45, strong range, right? And what I like about the range is it's relatively small right now. So the risk is low, but the pattern is strong. So that's why I'm in well over 1,000 shares. I think I'm in, I want to say not much. It's like 1,400, something like that. So I'm under 2,000 shares. I'm over 1,000, but less than 2,000 long in this thing over the weekend. Now, again, if it bites me in the butt, it may gap down to 12. That may be a 60-cent hit at most. But if it starts to gap and run over, say, the 1320 and runs to 14, I scale in. So this is an exceptionally strong trend. Strong trends are slow grinders. That's it's what a Wall Street guy told me. One of my institutional clients had called them grinders. So you have a nice slow grind up like this, that's a moneymaker. They're usually potentially a money-making chart because it's not up and down and all over the place. It's a nice, steady, continuous uptrend with new highs. And again, the correct way to trade these is not to try and navigate inside that. It's to just swing trade it and buy some during its uptrend. So that's another good chart to look at. If we look at our SQs, you can see. Now this one is better for, this one's good for, this is Dust, I'm sorry. Dust is a good example of one that's good for day trade because it had a couple of legs up that ran at least 40, 50 cents, and it's playing around at the upper part of the 2-day chart, right? By the way, one thing I want to encourage you before I keep going here is I do consider joining my live room. I like to run a very professional, intelligent room. I got a lot of smart traders, and we're record-breaking for the last, I think it's, I'm trying to remember, maybe 2.5, 3 years, a record number of new traders on board this past month or so. So with so many new traders on board, we got lots of new folks and a lot of our smart regulars as well. So do consider it, trademastery.com/live. You get over 30 hours of training for just $97 for the trial. And if you don't like it, I'll give you your money back. So risk-free, guarantee, because I stand behind it. I believe in what I'm doing. I've been doing this for so long, I should, right? So you can see testimonials and all that. But anyway, the point is join my live room. I'd love to have you there. We have lots of smart people to learn from. Some of our best charts today come not from me, but some of my members. They're really smart folks like Mick and Ari and John and Ted and let's see, Wendy. So a lot of smart people in the live room. So anyway, enough pitch. That's kind of it for the sales pitch. There's no other, I'm not a big salesman. I'm a trader. It's what I live for. But if you want to join me, have at it. We use this same Zoom platform, so it's really easy to understand. And we do 5 days a week, both the morning and the afternoon. We have day trading, both morning and afternoon, and swing trading every single day at the close. And I will stick around at least 10, 15 minutes, put on my own trades for new trades, for swing trades, and I'll tell you when I buy them and which charts I'm buying and all that kind of stuff. Okay. Just the last quick thing here. That's I'm not going to read this. That's a quick list of the kind of skills I'm going to work on. And more interesting to me is kind of the buy the open, sell the close thing. One thing you want to think about is where to scale in and where do you trail a stop and what kind of strategy can make you the most money and keep you out of trouble for things when they go sideways, they go back down sooner than you want it. So what's a way to develop an entry and exit trading plan that's sensible and it's based on rules and it makes sense? And so we go over a lot of strategy tests as well in the live room and lots of stuff there. So close that PowerPoint. I'm of a mind now, I kind of hate PowerPoint because PowerPoint's used by people that don't trade. So I really trade, so I like to cover this. All right, so anyway, join at Trade Mastery Live. Let's get back to it. Now, sometimes you'll get end of day pivots, right? I was looking for, but did not see any love from our pot stocks. This is a good example of, I bought the close and I bought 1,000 shares each of this. It was in pretty heavy. And I watched with some dismay as they started to drop down to what I paid for them, but I closed out the positions right after 7 a.m. And that's another quick tip. If you're in a gap, this open was at 6 a.m. before I could trade with Fidelity. You can't trade till 7 a.m. I would have sold it right here on the drop, but if you're in an overnight hold and it gaps up and starts to go down, this is a good example of why you sell at the very first sign of trouble. There may be a descending triangle, a bearish cup, or other loss of even, any loss of 20 cents or 10 to 20 cents under support at whatever time you can trade it is a good sell signal on a gap that's in your favor but starts to go adversely, because if you hold it, it could go down really far. So anyway, this is a good one that I'm going to keep on the radar for next week for a potential bounce, and of course Tilray as well. We're covering a lot more in the Friday session, but I cut this list down just to illustrate. So for cheap stocks, these have good volatility. So we may get, that's the Biden pardon bounce, and they sold the news, right? The meme stocks get faded, so that was the case. Now when we look at some of the inverse ETFs, and see SQs is always my favorite, because see, that's another good example of a slow, steady grind, a really good, strong, consistent chart that ran all the way from what, 54 to 59, almost 60. So a $5 runner, $5 on a $50 instrument, ETF in this case, really good. So does that make sense? How many of you think that might be a good idea, to just buy the open and not try and navigate through squiggly up and down in the middle of the day? Because that's really hard as heck, and it's very frustrating. I've been frustrated often trying to navigate the ups and downs intraday. It's often a good idea as an alternate strategy. Momentum scalping is great, and have at it. If you like video game day trading, that's fine. And we do that a little bit too, but mostly I like consistent charts that you can just buy in the morning, sell in the afternoon. It's much more than, scalping 20 or 30 cent round trips. And if you're in your 20s and you're a young person, you want to play it like a video game, it's like Call of Duty or Grand Theft Auto or Battlefield, blam, blam, blam. Good luck with that. But for those of us who are a bit older, it gets tedious. Even though I do that daily, I trade like that too. But it's easier, I think, to just do a buy the open, sell the close strategy. Because with charts that are consistent, it can pay off. And even charts that are inconsistent, if you trail your stop correctly, it can also do well. So good stuff. Say, hey, Steve. Yeah, Matt says that sounds good. Just buy the open, yeah. And then either you get stopped out if it rolls down on a rollover, or you make some money. But either way, the strategy notes that I'm currently working on and have been working on is the way to resolve that. You can trade, pair trade, say SQs versus TQs is one thing, and then the critical variable to test is the midday add or the midday subtract. So in the middle of the day, you should either scale into the one that's going up, so you double in, or if it's one that's going down, you scale out of it. So you start off in the morning, you may want to buy some of each, like SQs and TQs, and they'll start going opposite directions. You scale in the middle of the day on the one that's going up and scale out of the one that's going down, and then let it ride into the close and then close it out. So things like that are things that we cover, some intelligent stuff. So a question from Steve, hey, when shorts say that it's an SQ and it starts to go up, do I place my stops 20 cents above the whole number or 20 cents below the whole number? Yeah, that's a sensible approach. I often use 20 cents over the whole number for a long. So, for example, this one, let's see. Where's a good play? Looking for these. It depends on the price of the instrument too. For things that are relatively inexpensive, say under $15 or $20, I often use, 5 or 10 cents above the whole number for an entry. For things that are pricier, say 60, 70, which I don't cover too much, but I still cover them, I may use 30 cents or 40 cents above the whole number. So it depends on the chart setup and the kind of volatility of that particular day. On more strong days, we use tighter entries just above a whole number. On choppier days, we use more conservative entries to keep us hopefully out of trouble on the chop. So good, smart questions. All right, friends. Well, I think I'm going to wrap up for now. I think that's about it. Keep an eye on those. Pot stocks, we have oil in play too. Trader asked about Marathon and Halliburton. Didn't look good on Friday. I wasn't covering these yesterday, but a trader asked me about these. Okay, Hall's pretty good. And Oxy Pete's often fun to day trade as well if it gets legs. On Thursday, it did, not so much on Friday. This one I'm keen to trade on a recovery. This is one I like to trade maybe 2,000, minimum 1,000, maximum 2,000 shares at a time, these cheap stocks. So for example, this one, not a trade recommendation, but if it opens, say, at this level, which it won't, but if it opens near 220, I'd go long, say, at the 227. So that's a couple of pennies above the quarter point. I'd go along at 227 with a hard stop at 223, 224. So scalping, if you're doing thousands of shares, you want to have no more than a nickel stop on this kind of chart, right? You don't use like 20-cent stop on a $2 chart. That's stupid. You use a nickel at the most. So if you scale it, going like 227, 232, 237. Those are good break points. Yeah. Test that out. Remember I said that. And somebody remind me next Saturday. My official calls, not a trade recommendation, but for technical analysis and education use only, light this up over 227, 232, 237, 242. So just a couple of pennies above each nickel. And then scale, trail a stop at say no more than 5 cents, usually 4 or 5 cents right under. So if I buy 227, I'll put a hard stop at down, say 222. Yeah, that makes sense. If I buy the 232, I'll put a hard stop at 227. The neat thing is, let's say this wants to run up to 260. And if you're doing 1,000 share incremental trades at a time, you can be in 5,000, 6,000 shares by the time it's up here. And then if it starts to slowly fade back, you just go to cash. Not my favorite kind of chart, though. I like charts that are generally a little more volatile to the upside and have some run to them. So anyway, take care. I think that's about it. Let's see, so on DXCM. Okay, let's take a look. Trader asking about DXCM. Delta X-ray, Charlie Mike, let's see. It's a gapper, but it's too expensive and it's $100, so I don't trade $100 charts. If I did though, I'd be looking for plays in something a little more volatile like shorting Apple. I remember I said my traders were here, I remember I said short, I said we take a bite out of Apple if it loses a 144, I think it was. Anyway, it dropped all the way down to 140. And again, not a trade recommendation, but this would be a really good short under the 139. That's an official call, official educational thing to learn from. I'd go short under the 130. Specifically, I'd do short at 138.7 with the cover stop at 139.50. And that's the kind of thing I cover for traders, is not only the entries and so forth, but also very specific patterns for how to trade. Kind of last one here, our short crude oil ETF. It dropped on news of the Saudis cutting production. Of course, that leads to an increase, not a decrease in the price of crude. So short crude's down. So obviously that means that which one is up? UCO. And opposites attract. Learning how to trade, pair trade, opposing leveraged ETFs is always a good idea, because you know for a fact that when UCO goes up, SCO, by definition of how it's calculated, will go down by the exact same amount with the same exact pattern. Everybody see that? UCO is going up, SCO is going down. So last thought for the day, a pair trade, a professional pair trade. And I teach this in my live room. Join my live room at trademastery.com/live and learn this. I'm very smart. Well, I shouldn't say that, but people have said I'm smart. Anyway, the point is you pair trade these. So I might put, say, for example, here's the thought. Let's say, for argument's sake, they open at this level on Monday. You'd pair trade it by, say, putting a buy stop order for SCO at 23.20 in case crude oil price drops. This will recover and go back up. So we go in 23.20 long on this, and simultaneously, we then also put a buy stop order in this, say up at 34.6, maybe 35.10 or something. So that way they're divergent. The one goes up and the other goes down by the same exact, it's like a Rorschach test, a mirror image chart pattern. So, and then you feed the one that goes up, right? And scale out of the one that goes down. So that way you're kind of long and short the market near simultaneously, and then you scale in on the one that works and out of the one that doesn't, and let it go all day, and then close at the end of the day with the one that works. So anyway, that's it. That's how to attack the market intelligently. I used to be a corporate statistician for the Ford Motor Company. I'm a certified quality engineer, UCLA graduate, blah, blah, blah. You have to have some intelligence to beat the market. And you probably don't want to figure all this stuff out on your own, because it took me hundreds and hundreds of hours. I've been day trading since the late 90s, so hundreds of hours per strategy like this one, right? So that's called a pair trade with leverage. You can do this with SQs versus TQs, LabD versus LabVIEW, etc., right? So UVXY versus SVXY, dust versus gold, whatever. So that's about it. All right. Well, thanks, Brian. Thanks for the Saturday sessions. If the U.S. 10-year keeps going up, there might be a credit freeze. Hopefully not, but some cash. Yeah, it's probably a good idea not to have some cash in case the banks have a problem. So anyway, so much to go through, and I will wish you all the very best. I want you to be safe next week. I want you to try and preserve capital and make as much money as you can. Remember, don't listen to the talking heads because they're usually wrong. I won't mention the name of one certain guy who was bullish all last year. He kept showing, it's like perma bulls and perma bears don't work. You got to be flexible, right? Like Darwin says, survival of the fittest, the most adaptable are the ones that survive, not the ones that are most stubborn. So you want to be flexible based on where the market, I'm a price action trader. I'm 100% price action. We care nothing about fundamentals. We care nothing about news. All we care about is it going up? And if so, is there still some play in it that I can make some money with potentially? So that's what I focus on. So anyway, y'all take care. Wow, big turnout. Thank you all so much for being here on Saturday. By the way, let me ask a quick question for all of you who are here. Let me ask a quick question. Is the 30 minutes format okay? Do you guys like this? Because I don't like, for me, for example, it bore the F out of me if I had to watch like an hour-long PowerPoint presentation. That to me would just put me to freaking sleep. I'm a day trader. I'm very fast and furious. I'm focused. 30 minutes, I think, is plenty enough time. Speak my piece, and then we all go do other things on the weekend. Is 30 minutes good? Half hour is good. We'd watch anything. Half hour is good. 40 minutes best. Yes, perfect. Love it. Love it. Great. Yes, thanks. 30 minutes, awesome. Hey, thanks so much, folks. Really big turnout. So thank you all. Like a record turnout. Great 30-minute. Thanks. Okay, thanks, folks. See, Wendy saying I like it when you ask for symbols and look at charts. Yeah, that's good. 30-minute good. Yeah, with so many people here, we got hundreds. If I ask everybody for tell me your favorite chart, I get like 323 folks, or even if a third of that posted, I wouldn't have time. We'd be here all day, but I will post charts of your guys' choice on occasion. So appreciate that. I do like the 30, agree about the 1 hour PowerPoints. They're not good. 45 is also okay. A few more time. Okay, thanks, Matt. Hey, thanks, Matt Frank. I appreciate it. Hey, thanks, Brock. Thanks, Matt. All right. Thanks so much, folks. Do take care and do consider joining my live room. It's not that expensive and you get to learn a lot. Only $97 for 2 weeks, which is, I think, over 20, 30 hours, something like that. Lots of training, money back guarantee. And I hope to be part of your trading, at least stop minimization, stop avoidance, and get in on the right charts at the right time. And also, too, I give specific entries of where to go in and also live real time, sell now and then re-enter here and kind of thing. So I give people for educational use only, I got to say for compliance, but I do give specific entries ahead of time before 9:30 and then update those throughout the session. And we also pull up new charts as they come up on people's scanners. So, all right, well, do take care. I'm out of time here, so we're going to wrap. Have a great rest of the weekend. Be safe out there. Be safe, and again, visit www.trademastery.com/live.